After being a bit up in the pre-market, Tesla is now a bit down in the actual market. And it's not totally surprising that we'd have a breather after the big run up yesterday, but it's a little surprising in that there's really some solid good news this morning, which we'll be reporting on in a second. And I'm seeing a trend of Tesla heading back towards the green today. We'll see how it all works out, and we'll check it again in about 15 minutes at the end of the show. There was some Fudster articles out there, but they're the same old about, the recall of 1.8 million vehicles for a latch problem. Of course, it was an over-the-air fix. And there was a couple of other Fudster articles that were just even not worth reporting. I think most of the investing public gets those now, but we'll see. Maybe that's part of it. Maybe it really is just some profit taking, because that was a pretty good day yesterday. All right, let's take a look here. What is going on? According to Gene Munster, he says, look, Tesla was up 5% yesterday on a combination of being added to Morgan Stanley's top pick list. That probably did help, along with the release of FSD supervised version 12.5.1 over the weekend. He says that version comes about a month earlier than he anticipated, and more importantly, is a big deal because it marks a step change in the product's utility based on the company commentary on the last earnings call. He says the central question for many is, when will we have unsupervised FSD widely available? You think? Yeah, that would be. On the last earnings call, Elon said that he would be shocked if we cannot do it next year, but he did say he thought it would be later this year. And even Larry Goldberg is now believing we might be looking at this year. Goes without saying, Elon's missed this timing on FSD before, as evidenced on his 2017 claim when he predicted Tesla would achieve autonomy by the end of 2019. The exercise of guessing the timing of unsupervised FSD is a fool's errand. The real question is, will we see this by the end of 2028? This is about the outer limit that Tesla investors are willing to wait. How in the world does he come up with that number after saying it's a fool's errand anyway? I don't know. My sense is, given the progress that FSD is currently making, the company will reach the milestone in 4 years or less. Okay, yeah, if you say so. I really think, as you've heard on this channel, if you've been paying attention the last few days, there's more and more consideration by really smart people that if Tesla wanted to, if they really needed to, if there was like an urgency in terms of profit or an urgency in terms of cash flow or something, they could probably start doing the robotaxi like now. They might have to limit it to certain cities or certain areas of the country or whatever. They might have to limit it in terms of not going into parking lots of shopping centers. There's a lot of things they could do to put some limits on it. But quite frankly, I think we're so very close. And those folks that are estimating that we'll have it by the end of the year probably will age well. All right, Sawyer Merritt says, Daiwa Capital has increased its Tesla price target to 225 from 180. There you go. And this also from Sawyer. Today, the city of South Pasadena, California, unveiled the nation's first all-electric police fleet, 20 Teslas. The 20 Teslas are expected to save about $4,000 a year per vehicle, just on energy costs, or $80,000 a year for the total fleet. Police vehicles typically idle more than other vehicles as officers make traffic stops and respond to emergency calls. The gasoline engines must continue to run just to power the car's emergency lights, radios, and other equipment used in police cars. In contrast, EVs are emission-free while driving and while idling. I'll add that to the story. A bank of 34 new electric vehicle chargers has also been installed at South Pasadena City Hall to service the fleet. 34 electric vehicle chargers for 20 vehicles. Wow. Maybe they should open it to the public. And this police fleet was upfitted by Upfit Tesla. You can find them on X. Then we have this from Tesla Fan Metal. He says sample size is still small, but early data suggests a marked improvement in 12.5 versus 12.3, which is in line with people's overall reactions we are reading here on X. City miles to critical disengagements up almost 4 times. There you go. That would be, Elon had estimated 5 to 10 times. Maybe as the data gets a little longer, a little more data in, maybe we'll see that start to move closer to 5 to 10 times. This is from Tesla Chan regarding China numbers last night. Another reason why you might think Tesla will be up this morning. Just breaking now, that would be last week, we had 13,500 total vehicles. This month we've gone 6,500, 11,400, 10,500, and now 13,500. That's that 30 seconds a vehicle, rate that we're getting now. It's got to be part of that. And Gary Black responds saying, look, Tesla China reported another strong 13.5 thousand insurance registrations for the week. After 4 weeks of the third quarter, Tesla China is now up 49% quarter over quarter and 39% year over year versus last year. This appears to be Tesla's best start to a quarter ever. Well, of course, if that's happening in China, and even if you're just staying the same in the United States and Europe, should be a good quarter. All right. And then this is from Fresh Jiva. Fresh, just like it sounds, Fresh Jiva. It seems the 0% financing deal is going well in China. Yeah. And I didn't know about this. He says their new $2 billion working capital loan at 2.7% interest to finance the deal was a stroke of genius by the Tesla finance team. Wow, where do you get 2.7% money? That's just amazing. I'd like to hear more about that. They should have gotten more than $2 billion. All right. So this is Randy Kirk, and it is time. It is that time to hit the like button. And if you haven't subscribed yet, that would be a real help. I can't imagine why you're not subscribing. But anyway, subscribe and then notify. We got Brian White, as usual, on Tuesday, and then, as usual, Nicholas Gibbs tonight. I'm really going to be here. Nicholas Gibbs has been reporting on X. I think he's having a good experience with 12.5, but we'll find out tonight, along with what he's looking at in terms of this, some of these economic numbers and the Tesla numbers. Okay, and then of course joining Patreon. I've had a dearth now, a little bit of a dry spell here, about a week. Nobody joining after a lot of good ones there for a bit. So if that's something you're considering, this would be a good time to get the momentum started again. $3 is all it takes to get in on Patreon. We've got the CoreLogic Schiller U.S. National Home Price Index covering all 9 U.S. Census divisions that reported a 5.9% annual gain for May. 5.9 annual gain for May. That's down from a 6.4 annual gain for for April rather. So this is old info. I mean, this is like, their information is so slow to come together. Believe me, this is today's release. I don't know why they're like a whole month behind. The 10-city composite saw an annual increase of 7.7, down from an 8.1 annual increase the previous month, and the 20-city composite posted a 6.8, dropping from 7.3. I think, even though this is 2 months old, I think it's going to be, I'm beginning to think we've apexed. I'm beginning to think that housing pricing is going to flatline. I don't know if it'll go down. Yeah, there might be a little bit of a down movement. It won't go down much because there's no inventory. But when mortgage rates come down, we could see some upward lift. But I think those two things are going to be, there's going to be pressure, a little bit of pressure for the prices to come down with the mortgage interest rate deductions pushing up the other way. So I think it's going to flatline. I think we're going to see a year maybe of flatlining on housing pricing. Believe that. You heard it here first. You hear that? Anybody else making that prediction? Well, when they get out this far, at some point it's got to stop, even when you've got these inventory dearth. When you just don't have enough inventory, there's a point at which the consumer cannot continue to pay more. They don't have the monthly income to take care of it. So I think we're getting there. I think we're very close to being there. All right. The number of job openings, the JOLTS number was unchanged at 8.2 million for the last business day of June. According to the U.S. Bureau of Labor Statistics, over the month, both the number of hires and total separations, little changed. And that's 5.3 million and 5.1 million. And with separations and quits and layoffs and discharges, little change. So that would give us some hint at what we might be looking at this Friday. We might be looking at kind of a meh number. We'll see. We got ADP tomorrow. We've got the regular jobs numbers on Friday. If those come in meh, then probably we're going to see the cut that everybody's hoping for in September by the Fed. Tomorrow we will hear from the Fed, and they will probably, according to everybody, which means that maybe everybody's wrong, but anyway, according to everybody, they'll be teeing that up. They'll be hinting at that September reduction on the meetings tomorrow. Okay, this is breaking. The Conference Board Consumer Confidence Index rose in July to 100.3 from a downwardly revised again. Everything's being downwardly revised. Everything is like up here, and then the next month we find out it's revised down. I don't want to sound political here, but when that's always the case, it's up here and then it's downwardly revised. It sounds like somebody's gaming the system. It may not be true, but why is it always in one direction? It's up here, so the headline gets out there. The headline gets out there and makes the current administration look good. And then the next month, it's downwardly revised, and nobody even mentions that. Except, of course, on this channel, we mention it. Anyway, from a downwardly revised 97.8 in June, the present situation index, based on consumer assessment of the current business and labor market conditions, declined to 133.6 from 135.3 last month. Meanwhile, the expectations index, based on consumer short-term outlook for income, business, and labor market conditions, improved in July to 78.2, and that's up from 72.8 in June, but that's still way below the 80 that is the threshold, which usually signals a recession. So we're continuing to see that labor, the concern about labor, concern about income, all of that well under the 80, and that 80 is usually the number. If it's under 80, it usually signals a recession. I don't know. I keep saying that the recession started in June. We'll see. The cutoff date for the preliminary results was July 22nd. Confidence increased in July, but not enough to break free. This is according to these folks. This is not me talking. Confidence increased in July, but not enough to break free of the narrow range that has prevailed over the past 2 years. According to Dana Peterson, the chief economist at the Conference Board, even though consumers remain relatively positive about the labor market, they still appear to be concerned about elevated prices and interest rates. No kidding. And uncertainty about the future, things that may not improve until next year. Compared to last month, consumers were somewhat less pessimistic about the future. Expectations for future income improved slightly, but consumers remain generally negative about business and employment conditions ahead. Meanwhile, consumers were a bit less positive about current labor and business conditions. Potentially smaller monthly job openings are weighing on consumers' assessment of current job availability. While still quite strong, consumers' assessment of the current labor market situation declined to its lowest level since March of 2021. In July, consumer confidence improved among consumers under 35. So under 35, they're thinking things are going okay. And those 55 and older, but the married with children folks, the 35 to 55 group, saw a decline. On a 6-month moving average, confidence remained the highest among consumers under 35. On a 6-month moving average, consumers making over 100,000 were the most confident, but the gap with other groups narrowed. All right. So what does all of that mean? Are we in a recession? Are we faced with a possible recession in the third quarter? Of course, you know what I think about all that, but what does the market think this morning? All right, the market thinks that Tesla is moving back toward the green now. It's only down $1.52 after being down almost $3. I think even maybe a little over $3 at one point. So sitting at 230 and 58 cents. We've got the Dow up 125. Let the rotation continue as the NASDAQ is down 22.27. So is the rotation happening? Is the rotation not happening? It was Larry right last night. Larry said, look, the rotation is happening, but it's fits and starts. And so it's not going to just be always rotating out of the NASDAQ and out of the Magnificent Seven into a broader market, but rather some days it'll look like that, some days it won't, but that overall, maybe this rotation is happening. That was Larry's opinion. All right, so we have got the Magnificent Seven other than Tesla and NVIDIA. Everybody else is up. NVIDIA, who's facing an earnings call tomorrow. Yeah, tomorrow. I think so. It might be Thursday. Anyway, it's down 3.61, which of course, just a few weeks ago would be $36. So it's sitting $107.98, but all the rest are up, but narrowly, very narrowly this morning, just slightly. Tesla now down only $1.10. It is moving toward the green. Maybe before we're done with this conversation, we will get back into the green. We'll see. Okay, what are we about? The Cathie Woods are completely mixed. I was curious to see about that. 2U is up again, doing nicely. I don't know what 2U, I have to remember what 2U even was. It's up 34% after being up over 100% yesterday. They must have had some really, really good news. That's kind of a penny stock, is a couple of bucks, okay? Anyway, let's see. Now Tesla's only down 86 cents. It's getting better and better. We're almost to the green. All right, let's go ahead and take a look. Oh, I didn't tell you the percentages. I'm so sorry. We've got the Dow up 0.29%. We've got the NASDAQ down 0.1. We've got the S&P up 0.1. And there you go. There are the percentages with Tesla down now 0.37. Okay, for the bonds, we have got the bonds down 0.3 basis point. So pretty close to break even on the 10-year at 4.171. That's a very satisfactory number right now. The 2-year also down 0.2 of 0.2, unchanged. As of this, up to the minute, it's changing back and forth. It's basically unchanged. 4.171 and 4.383. We are now 21 over 21 in the inversion. The 2-month is at 5.374. It is down a little bit also, and so that continues to be way over 100. Way over 110 basis points difference there. JetBlue jumps 20% after surprise profit. So I think that's the first airline to have a surprise on the upside. Just reporting that as I see it going across my screen. All right, let's go ahead and take a look at oil. We have got oil this morning continuing down another 75 cents. Oil is now at $75. I read a headline yesterday that said that the oil pipes are filled to overflowing. And so that puts Texas Intermediate at 75, Brent at 79. Wow. Natural gas bouncing back a little bit, having trouble getting under $2, although I think for a minute it was under $2 last night, but up 54 cents. I'm sorry, up 1 cent this morning, or 0.59% at $2.04.8. We've got gold up again, but still under 2,400, up $8.50. Silver up 0.68% at 28, still well under the $30 mark where it has been above recently. And copper this morning down 1.13% at $4.04. Again, seemingly holding pretty well at 4. We have got the yen, dollars up against the yen, down against the euro. That has been back and forth all last week, too, end of last week too. We have got Bitcoin falling down again by 1,263 points. or dollars. It is at 66,121. And so back into the middle of its range after flirting with 70,000. Okay, that would be all of the news that's fit to print. Let's go back and take a look at, of course, Tesla to see if it did manage during this call to get back into the green. Nah, 87 cents. I was hoping it to get back, but it is definitely headed toward the green. All right. So if you didn't hit like, subscribe, and notify yet, please do that. If you didn't hit all those things, then just keep in mind, Brian White will be here later. Larry Gibbs will be here. Larry Gibbs. Who's Larry Gibbs? We have John Gibbs and Nicholas Gibbs, but I don't think there's any Larry Gibbs, at least not on this program. Anyway, Nicholas Gibbs will be here tonight. Yesterday, some great content. Oh my goodness. The Brian White video was so good, and so was the Larry. So I'm going to put both of them up. Larry Goldberg and I had a great conversation last night about the future of AI and what does AI even mean? When will we know that there's an AI breakthrough that's clear and concise? When will the companies know? What is the new? We've already passed the Turing test. What is the new goalpost? What are we looking at there? All right, so I'm going to put both of those up right there that you can go back and take a look at. And I can't stand it. I have to look one more time. 33 cents now. We're almost there. I feel like just sitting here and waiting until green, but okay, I won't do that. It's been great talking to you.